Great on this Tuesday ahead of tomorrow's FOMC's rate decision. Today and tomorrow, they are meeting with the new Fed chair, Wash, and they're deciding what their next move is going to be. And they only have one move. $39 trillion of debt. The only thing they could do is run it hot. They have to go ahead and lower rates and let this thing run and deflate it away as much as possible. Which assets are going to feel the pain the greatest? We can see yields are down right now off of the, let's say, energy price acceleration that we've seen over the last couple of months. And by the way, we're looking at right now at crude futures trading at almost just under $76 a barrel, right around the lowest they've been since March. And it looks like there's a lot of jitters ahead of Friday's signing. And then once the signing takes place, sometime afterwards, we should start seeing some traffic beginning to flow through the strait, but everyone is going to be on, let's say, a razor edge to find out whether or not this deal is maintained. We know that Israel is simply not playing ball, or at least not seeming to be. And today, Iran is saying, listen, Israel's got to back off. They got to get out of Lebanon, and we'll see what happens with that. But one thing seems to be sure, or one thing seems to be true, is that both sides, the US and the Iranians, are looking to go ahead and move on. We'll find out likely by the end of the week what exactly the real terms are, and then we'll be navigating over the next couple of months what it looks like as far as the future agreement being worked out. So still a lot in front of us. And just from price alone, we're seeing right now a bit of relief as looking at crude trading back down towards $75 a barrel. NASDAQ here under mild pressure. I mean, don't forget, we're looking here at a major gap up, gap and run to new all-time highs. We're seeing right now ahead of, is this jitters ahead of the signing of the, I'll call it an arrangement. It doesn't seem to be. And the reason I say that is because the headlines definitely reflect that. But when you look at the 10-year, when you look at the price of oil, it does not seem to be pricing this in. This seems to me probably to be just a bit of a backfill after the euphoria over the weekend. And then also ahead of the uncertainty of tomorrow's FOMC. Don't forget, one of the things that the new Fed chair wants to introduce is a lot more, let's say, uncertainty, in so much as that the playbook has been forward guidance. Here's what the Fed is doing. Go ahead and front run us, position, and it's led to exaggerated market moves. It's easy to front run the Fed when they tell you exactly what they're doing. Wash is going to try to make it so that you have to understand markets. You have to be able to read markets in order to know how to position. I'm all about it. It's a good place to be. We will see what. I was looking at the energy, but the next big thing. Yeah, I mean, for the next big thing right now is obviously chips, semiconductors, and of course, it takes energy to power them. Energy, chips, raw materials, they seem to be what this future era that we're moving into. They seem to be some of the biggest. People were looking at the sale of semiconductors in the dot-com bubble and then comparing it today and be like, oh, well, we're the most oversold on the semis as we were back then. Well, I was looking at the sales, and the sales back then at the height of the dot-com bubble was like $204 billion. It's almost expected to be 900 billion this year in 2026. There is one thing that's true. There is an insatiable demand at the moment for these semiconductors. If you believe in a world that is going to see a lot more automation, it's going to require a lot more of these chips. That's my belief. Now, I do believe that there could be further competition. I do believe that NVIDIA's margins could be eaten into, but I think that the market is likely be already pricing that fairly and in. So here we go. Not sure what kind of language he's going to give. I think there's still a little bit of I think there's a little bit of uncertainty. There's a lot of bit of uncertainty, and you know, uh, there is no signed or done deal. And I'm not talking about just the 60-day extension to try to work something out. There's a lot of uncertainty ahead of the Fed. It's a very difficult job to be walking into at this particular moment. I think that the next Fed move will be a cut, not a hike. Does that change if we saw well, I don't know what would change it. I was trying to think, would it change if we saw the situation just do a drastic U-turn and oil break out above 110 and shoot towards 140, 160? Well, raising rates is not really going to go ahead and fix the supply issue. So I'm not sure about that. And I think that would do enough demand destruction on its own. So they'd probably be working more towards emergency cuts rather than hikes. Inflation is being caused by other things than the supply shock of oil. I'm not sure about that. Um, I think that, again, and the title of this video is they can't pay back the 39 trillion. Here's what they're going to do. And what they're ultimately going to do is cut this thing, run this thing hot, and inflate this away, which means that even though near term and right now, you are seeing, as we look at the 10-year, we're seeing a nice buy impulse underway and accelerating. It's tracking the price of oil, and it should continue. And I think that if the status quo remains the same as it is now, that we're coming down towards 4.2% in that area. I don't know whether or not we consolidate down here. I don't know if we break down here or what happens, anything like that. I'm just looking at right in front of my face and what's happening right now. What I do think is going to happen is long term, that bonds, especially long-term bonds, are going to remain under pressure as they try to inflate this all away. I think that obviously the dollar is going to continue to be weakened and we're going to see a further leg down. And if they are able to engineer this, let's say, run it hot, we're going to see a lot of further dollar weakness. By the way, the Bank of Japan raising rates to 1% and the cross does nothing, doesn't even blink. It looks like that the US dollar, Japanese yen is just almost stuck at 160. Could we envision a situation where they lose control? Absolutely. That's been, for the last 20 years, that's been like the macro play or thesis, I should say, that ultimately this thing is going towards 200. Again, yeah, I would even expect a bit of a mean reversion, at least down towards this structural support, and if not even one lower. That hasn't transpired. I thought it probably would on this, but it could be. Well, I don't know what it's not. Is it time to buy bonds? I don't. Short term, maybe it's a trade. Long term yields. I don't long term duration. There's nothing good about it. I don't think so. I think we're going to see dollar weakness. I think that once the market realizes that the next move is going to be actually coming in and cutting rates, not hiking rates, we're going to see gold and silver find their footing. And I'm just going to go ahead and just, we're on the verge here of a nice breakout on silver. It's tough ahead of the FOMC, and I can't imagine what they're going to communicate tomorrow. In so much as that, there's a lot of uncertainty that's ahead of them right now. So they can't come in and be like, "Oh, we're going to cut rates." Could I see that happening by the end of the year? Yeah, dependent on whether or not there's actually a return of normal flow of traffic. Then they could go ahead and sell the whole AI's deflationary story, and they could work towards what they want to do. I think that I don't know whether the market perceives Wash tomorrow as hawkish or dovish or whatsoever. I'm coming into it, just want to hear what he's there to communicate, listen to him. New Fed chair. This is his first moment to kind of take the mic, and then we'll assess accordingly. Right now, you're into some pretty strong resistance here in a downtrend on silver. Towards the low of the range, though, the range that's going on for the last 6 months. If we get a breakout over here it might be actually front running the whole narrative and what's expected. I think that silver is going to react pretty good over here. As far as gold, let's take a look at, I'm talking about gold, not looking at it. So how do I find that? Here we are. I was on the time frame threw me off. So here we go. Back on the daily over here, similar situation. And we see that we are also into resistance. We're into also a 6-month consolidation. But guys, look at this. Look at the peak over here in late October back into 2025. Prices exactly where it is right now. We've seen to firm up the support right over here, testing it. That looks pretty good. Is this a good entry for gold? And if it is indeed, we get a breakout and it's a good entry, how far do you see it going? And I mean, listen, I wouldn't be surprised to see gold make a new all-time high out into 2027, but you're looking at a 27% gain if it does. Now, Bitcoin, on the other hand, let's say that Bitcoin is, well, from where it is right now, just track 27% and taking out that 82,000, which then would set in actually a major confirmation that an up move is in play. And there is, if you're looking around and you're looking to see where to put your money, and you're looking forward over what's going to happen over the next 6 to 12 months, for me, obviously, you can't deny that we're going to continue to see the great AI build out. Now, it's going to become much more selective in so much as the market is going to consider companies coming to market to raise money for the build out as a headwind. And then it's going to be looking towards those that don't have that same headwind. They're going to be actually probably the attracting more money, more investment. You're going to be looking at obviously, I mean, things that are like Bloom Energy, and some other people were mentioning energy is the play. There's going to be lots of selective outperformance in the space. But overall, when you look at the index, and right now it's like 49% of the index is led by, we'll call it the AI build out trade. That's going to continue. That sharp concentration into the tech and into the tech that is actually transformative here until this thing eventually blows up. That's where the concentration is going to be continued, but it's going to be even more selective going ahead. That's my read here right now on the market. I'm jumping back over here. This is like a simple session, short and sweet, in so much as that right now and today, I went ahead and I have all of the V5 stocks now set with alerts, not just for the Discord, but now into the dashboard. This is going to be the new dashboard that's going to look a lot more like this. The next thing that my objective today is to roll back and go into the V4 on Bitcoin and crypto and upgrade it to V5, which has the full working automation for the stop loss exit. So that's the goal today, is for me to first upgrade to V5. And then once that's done, then go ahead and then also input them into the algo dashboard. I'll have to obviously reset the alerts into the Discord as well. So it's a lot of housekeeping today. I'm waiting myself for V5 on stocks for new entries. And even though V2 has an entry pending here on TQQQ, I'm not taking it. I'm focused on V5 for stocks. However, just for your own discernment, I imagine, or I believe, that especially those who are fully automated, that some type of let's say hybrid of V2 V5 would something that would provide a smoother equity curve, as we've seen through things like with even V2 and even CTM 2.0 and Bitcoin and crypto. So ultimately, my goal and what we're working towards, if you saw the diversification video that Brownie Brown presented and the math and how it lines up, it's that actually the more templates on the more assets is coming back to Ace's grab of Ray Dalio and the Holy Grail, and its diversification within the algos. So ultimately, my goal is things like when we have, or we look at, by the way, we saw Bitcoin enter a new trade long, stopped out, 2% loss. We saw Ethereum lock in that short gain, 18% gain, 20% gain. And Bitcoin also on the buy side, taking that trade, taking that loss, 2% on the buy side boost. My goal ultimately right now is to, well, just housekeeping of what I talked about today, but to take and introduce, like I showed you the buy and sell side of Tesla, which had TSLA on V502, like multiple templates across multiple assets. And I think that is going to give us the edge that we're looking for. And then, of course, we'll help everyone discern of what we believe the best allocation is, and help everyone discern how they could decide what is the best allocation. Strongly believe that we are in a DCA zone for the metals. And same thing, like looking it out over here, whether we're looking at gold or silver, if you're waiting for a confirmation, right, that breakout of this line, that's as good as any. However, yeah, whether or not we even go as low as something into 3,600 or lower, DCA means like until this period, which began all the way in October, we're flat right now, right? All this DCA zone over here. So eventually gold will rise again. Silver too, right? Especially in this age where obviously you're going to need, and copper too should probably be in this conversation. I haven't looked at copper with you all because my templates changed as far as the open tabs, but copper is probably something right now that, is that an overcrowded trade? I don't even know. I'll pull up my template that we're accustomed to with the structure in it by tomorrow's session. So for today, short and sweet, I want to get back and accomplish upgrading the V4 Bitcoin and crypto to V5 so that that full automation is working for those that are using the trailing stop loss, the upgraded UI, and as well as the ability to put in the automation comments for those that are looking, and then get them into the Discord alerts and then into the new dashboard. Hopefully that this is firing without any changes needed. Once we get a new entry on the V5 stocks, we'll see. But if not, we'll adjust until it's fully running. For now, everyone, I'm here all day. Ping me on the inside if you need anything. Have a beautiful day, everyone. God bless you. And I'll see. So that, well, here's a ulterior. A lot of people believe that, well, let's say that the people who believed that, well, this is a tough one. I want to try to word it correctly because there were a lot of people at oil trading towards its highs that felt that oil was about to break out deterministically and be trading a lot higher. Those people still hold that same belief that we're going to soon see that. And listen, if the current status quo takes a U-turn, absolutely, that's entirely correct. Reserves continue to dwindle. They will continue to dwindle. Even with the deal signed on Friday, it will be weeks before companies deem it safe to transmit the Strait. You'll see some traffic picking up. You'll see India crossing because they need the energy. But before you start seeing a return to any type of normalcy, it'll need to be understood that this is, we're seeing we're seeing the risk definitely diminished. And during that period, you're going to continue to see low reserves continue to be pulled upon. And you'll probably continue to see the price right now it's knocking on the door. It could definitely fall down further from where it is. I saw yesterday a research stat saying that by the end of 2026, price will be $75 a barrel. Here we are today. So, you know, if things go wrong, then yeah, we could definitely see a major, major price shock, and that's going to have major ramifications. That doesn't seem to be the most likely path at this moment, though. And it seems that both sides here really want to find some type of way to move forward. And if that happens, yeah, it's going to be some time uh, through the summer until we start seeing some type of normalization of traffic, and reserves will be pulled upon. But then you're also going to see Iran bringing more oil to market. We already see the Venezuelans bringing more oil to market. And you're going to see a lot of countries begin to refill their reserves. That is going to cause, obviously, a bit of supply and demand. That's going to maybe, I don't think we're going to see oil fall like a rock in so much as that it's going to break to yearly lows or anything like that. But I'm not one who could tell you what a price range would be that would be realistic. But yeah, I don't know if I think a lot of countries right now are very concerned, saying, well, whoa, whoa, as like national importance, as sovereign importance, we should have bigger, larger oil reserves in case something like this occurs again or worse. So I think that you're going to see these low, record low oil reserves wind up getting refilled substantially, but over time So I don't think I mean, if one thing was learned by a lot of people, it should be that the economy is a lot more resilient than people thought. I do not think for a second that either the US and or China is going to be like, "Oh, this changes our mind about the importance of being the leaders into this new era," and pull back on their AI build out and the race. That I don't think Meta is going to be like, "Oh, let me pull back my spending," right? We'll watch for it. All right, y'all. Have a beautiful day. Back at it.